Namaste, good morning. The session where we want to wind up the assessment of companies. I became completely unwell. I'm yet to fully recover, but I'm very confident we can do this chapter and find out. I was unable to prepare the solutions for some questions. I thought along in the classroom I can prepare that. We have done up to question number 25, we have completed. I I'm starting with question number 26. I'm starting with question number 26. Have anyone tried the question and do you have some doubts? Have you attempted the question? It is a very interesting question. Hello?
I have a doubt, sir.
Yeah, go ahead.
One thing I'm taking the risk.
Your voice is not
That,
audible. Sorry.
sir, adjustment number three, sir.
This is interest and borrowing cost. That adjustment you
Yeah,
are speaking.
yeah. So in both the places, we have added and subtracted, or it's just still adjustment. Am I correct?
According to ICDS, we all know that in case of inventory, if it takes at least 12 months only, it will become a qualifying asset. If it takes 12 months only, it becomes a qualifying asset. In this case, okay, the recognition criteria, okay, is not met, though not meeting the recognition criteria. Hence, you have to take it out and expend it off. If you reduce the closing stock, the profit increases. If you reduce the closing stock, the profit increases. If you reduce the opening stock, the profit increases. If you reduce the opening stock, the profit increases. Vice versa, if you reduce the closing stock, the profit also reduces. So the net effect should be taken.
Okay, sir. Thank you.
Any other doubts? Others tried?
Yes, sir.
Yes,
Any
sir.
answers?
Business income 56 lakh 46 500.
56, 46, 500.
Yes, sir.
Anybody else have a different business income? First business
Uh,
income.
7299, sir.
72 lakh 99,000. Any other answers? Fine. Let me go adjustment wise. It is one of the finest question. Let me go adjustment wise so that you are clear. 72 lakhs. Add depreciation as per books 24 lakhs. Interest on advance tax 60,000. Borrowing cost. My dear friends, borrowing cost, it is not an eligible asset, so borrowing cost should be expended. It should be treated as expenses. Borrowing cost should be treated as expenditure. They have included it in the stock value. The company has included it in the stock value. I need to take it out of the stock value. Suppose if 9 lakhs is the stock value, 1 lakh is a borrowing cost. They have put the opening stock as 10 lakhs. I should bring it back to 9 lakhs. So I will remove 1 lakh from the opening stock. If I reduce my opening stock, my profit increases. If I reduce my closing stock, my profit also reduces. So, borrowing cost of 950 and 7 lakhs, though not meeting the criteria, included in the opening and inventory and closing inventory. Yeah, here is the solution. 72 lakhs depreciation. Here is the borrowing cost. On opening stock, I will get a profit of 950. On closing stock, I will get a expenditure of 7 lakhs. So the net impact is 2,50,000. The net impact is 2,50,000. Expenditure of 41,000 paid in cash, comprising of 22,000 to the producers of dairy farming product and 19,000 towards printing and stationery.
22,000
Daily
allowed.
farm is allowed, sir.
22,000 is allowed, only 19,000 is disallowed. 22,000 is allowed because it comes as an agricultural product. Rule 6DD protects that, whereas 19,000 is disallowed. 19,000 is disallowed. Three lakh 50,000 paid to a contractor for carrying out repairs work at factory premises. Tax was not deducted on such payment.
30% disallowed.
30% of 3,50,000, that is 1,05,000 disallowed. 1,05,000 disallowed. 30% of 3,50,000, 1,05,000 disallowed. 35,000 towards expenditure for earning income from transfer of carbon credits.
Income taxable
Not
at
allowed,
special
sir.
rates.
Income taxable at special rate of 10%. So expenditure will not be allowed. Income, as you said, correct. Income is taxable under section 115BBG. Income is taxable under 115BBG special rates. So expenditure will not be allowed. Contribution to electoral trust paid by way of crossed check.
Not allowed, sir. We
This-
can't claim 80 GGB.
Yes, very good answer, Venkatesh. Neither it is allowed as a deduction nor 80 GGB can be claimed. Contribution to electoral trust not allowed. Further deduction under 80 GGB cannot be claimed as the contribution is not made by approved modes. Expenditure towards advertisement in the publication of a political party, 40,000 paid by way of account payee check.
Add it back and claim deduction, sir.
Add it back and claim 80 GGB. Any advertisement in the political party will also be, in the publication of political party will also be regarded as donation. Section 37B. 80 GGB says, I will take it as donation and provide the deduction. Interest on term loan obtained from cooperative bank not paid before the due date of filing returns.
Consider it as income and subsequent year if payment made, it is allowed, sir.
Not considered as income.
Okay.
Disallowed under
Okay.
43B.
43.
Disallowed under 43B, friends. Okay. Interest on term loan on from cooperative but not paid within due date. Even cooperative banks or financial institutions included. Disallowed under 43B and allowed only in the year of actual payment. Allowed in the year of actual payment. Actual contribution to the pension scheme of employees 150.
10% of salary plus dearness allowance is allowed.
Very
So
good.
that is 10 lakhs and 10% is only allowed.
Very good
50,000
answer. Very good answer, Ananya. The question gives you the information here. The eligible salary and dearness allowance for pension is 10 lakhs. Okay. So, as per law, only 10% is allowed for pension contribution. Only 10% is allowed. 150 contributed. 10% is 1 lakh. 10%. I did it in the end.
Sir, I have doubt. Is it applicable to companies also, sir?
Yeah,
APCCB?
everybody. Contribution to employees pension fund 1,50,000. Contribution allowed under section 36. 10% of basic plus DA. So only 1 lakh can be claimed. 10 lakh into 10%. Only 1 lakh can be claimed. Repeating the adjustments. 24 lakhs add back, 60,000 add back, 950 minus 7 lakh, 250 to be added back to the profit. 22,000 no effect, 19,000 add back, 30% of 3,50,000 add back, 35,000 add back, 3 lakhs add back, 40,000 add back, 260 add back, 150 add back and allow 1 lakh. Unrealized rent recovered will go to house property chapter. Unrealized rent recovered will go to house property chapter. So you should minus 3,80,000. Unrealized rent recovered minus 3,80,000. Dividend from a specified foreign company, including the expenditure of 2,90,000 incurred on earning such dividend 160.
Sir, 4,50,000 income, sir. Taxable at special rates, 15%.
1,60,000 disallowed and 2,20,000 allowed at special rate.
நான் திருப்பி படிக்கிறேன். Dividend from specified foreign company, including the expenditure of 2,90,000.
Expenditure disallowed and
1,60,000 IFOS, sir.
290 disallowed,
4,50,000.
160 goes to IFOS.
4,50,000 will go to.
The expenses can't be claimed.
No, sir. 4,50,000 is income. So
Dividend from a specified foreign company, including the expenditure of 290 incurred on earning such dividend.
so 4,50,000. Okay.
Well, let's 4,50,000 and add expense of 2,90,000.
Minus 160 plus 290, no, sir.
That's what I have done, but our friends are saying that I'm just reading that line to understand how they are. They say it's 290 plus 160 is equal to dividend income. Dividend from a specified foreign company, including the expenditure of 290 incurred on earning such dividend, rupees 160. Okay, I'll take a small time to clarify this to you. Okay, as of now, I have in the material ordered and solution added back 290, reduced 160, but whether it is 450 or 160, I'll come back to you. I'll come back to you. I have added up 290, reduced 160. But you are right, it is taxable at 10%. No expenditure will be allowed, all that thing. Profit of 3 lakhs received from hedging contract entered into for meeting out the loss in foreign currency towards payment of an imported printing machinery valued at 95 lakhs installed on 15th December and put to use on that date.
Adjusted on the cost of asset and claim half of the depreciation.
Adjusted to the cost of the asset. This 3 lakhs should be taken out. This 3 lakhs should be taken out. 43A says any foreign currency fluctuation which is directly relatable to an asset should be adjusted with the cost of the asset and should not be taken as separately income or expenditure. So this 3 lakh is not profit, it should reduce the cost of the asset. The cost of the asset will become 92 lakhs instead of 95 lakhs. Instead of 95 lakhs, the cost of the asset will become 92 lakhs. Interest from bank on fixed deposit minus 135 taxable under IFOS. When we do total income, I will gross up. As of now, what is credited in P&L is 1,35,000. As of now, what is credited in P&L is 1,35,000. So that we need to reduce. May I know what is the allowable depreciation?
6,90,000.
Allowable
Plus
depreciation.
28 lakhs. Sorry.
8 plus 6,90,000.
28 plus 6,90,000.
28 plus 6,90,000. Any other answer?
Sir, total 44 lakh 10,000, sir.
28 lakh plus 35,000 normal depreciation we should reduce it, sir. 28 lakh plus 35,000 added back because of that 3 lakh adjustment.
No, you haven't read that depreciation as per income tax rules 28 lakhs exclusive of depreciation on the imported machine. They have not yet charged on it.
Sir, additional depreciation 10% plus 7.5% normal depreciation, sir.
Yeah.
On 92 lakhs. So total.
Our friend says 28 lakhs plus 9,20,000 plus 6,90,000. Correct?
Sir. Yes, sir.
Can I claim additional depreciation?
Sir, but it is not mentioned in manufacturing company. So they said production company.
Engaged in production. Yeah, production and manufacturing are interchangeable terms.
Okay. I missed to claim additional depreciation.
Yeah. And I will further tell you that I think we know or we studied, if not as a case law, we studied making of books is manufacturing. Printing of books from a manuscript, it is getting the format of a book. it will be amounting to manufacture. So my dear friends, 28 lakhs is already provided. For imported machinery, normal depreciation is 92 lakhs into 7.5%. Additional depreciation is 10%. So totally 44 lakh 10,000. Yes, Shaji, I look into that answer. இது வந்து 80 ccd you are telling இது எனக்கு நீ சொல்றது புரியுது. This is for claiming 80 ccd. Matthew, நான் சொல்றது
Okay, sir.
36. அங்க பாரு, இது வந்து நீ deduction under chapter 6 படிக்கிற. This is expenditure under section 36.
Oh, okay, sir.
Employer contribution to pension scheme allowed as 10% of salary. This is the provision.
Okay, sir. Thank you, sir.
Yeah. So depreciation. Expenditure pertaining to previous financial year allowed on due basis but paid in the current year in cash.
Disallowed.
Disallowed சொல்லக்கூடாது இதுக்கு.
Add back, sir. Income.
Treated as
sorry.
income. Treated as income according to 48(3), where any expenditure of preceding year is paid now violating the payment criteria, then such payment will be regarded as income. Will be regarded as income. Audit fees for the previous year 21-22 75,000. TDS deducted but not paid in the relevant previous year. However, TDS was paid on 31-12-22.
22,500 disallowed.
30% disallowed. 30% disallowed. 30% disallowed. So my business income comes to 56,81,500. My business income comes to
Sir,
56
carbon credit income, sir.
Carbon credit is a business income, Dana.
Okay.
It is taxable at 10%. In the question is not asking for tax. I need not take it out. I understand it is a business income. It is taxable at 10%.
Sir, that audit fees they have given in adjustment, so we should assume only it is taken, it is deducted from net profit, right? Sir?
Which one?
that audit fees is given in additional information.
Yeah.
We should assume it is
You should take
written.
it as it is being considered in net profit. From the top, once more for your quick correction, if any, 72 lakhs. Add depreciation 24, interest on income tax 60, borrowing cost 950 minus 7 lakh 250, payment to violating 48.3 19, TDS 30% 105, carbon credit expenditure disallowed, electoral trust disallowed, political party publication disallowed, interest on term loan taken from a cooperative society not paid within due date 43p disallowance, unrealized rent goes to house property, specified foreign company. I need to give you a clarity on this. Profit on hedging should not be forming part. Interest 135, depreciation 4410, 48.3 violation, 30% audit fees violation, pension fund. All these adjustments we have studied. Nothing is a new adjustment here. All these adjustments in various questions we have seen. It is only repetition of all the adjustments.
Sir, the provision on carbon credits, where did we study, sir? I mean, in a ஞாபகம்
Assessment of companies oda part 1 la irukum பாருங்களேன். 115 BBF படிச்சோம் royalty அதுக்கு
Royalty after that carbon credits.
Okay, sir.
இருக்கா?
Sir, can you show the pension scheme?
Immediately after 115 இருக்கும்.
Sir, can you show the pension scheme adjustment?
In here it is 115 BBG carbon credits.
Okay, sir. Thank you, sir.
Somebody, Antonio, you are asking something?
So this adjustment for pension scheme.
Pension scheme.
Yes, sir.
You asking me where did we study?
No, not very say like how do we adjust that?
No, we have to
See the
add back
adjustments, sir.
150. That is in PGBP module. We studied about employers' contribution to pension scheme. Contribution is allowed only to the extent of 10% of salary. So 150 has been contributed, but salary plus DA comes to 1 lakh, 10 lakhs. So only 1 lakh will be allowed, remaining 50 will be disallowed.
Okay.
So that's why it has been adjusted like this.
So can you move a little up?
Raja?
Can you move a little up? Let's scroll a little up.
Yeah.
Okay, sir, that's fine.
Teja?
Sir, a doubt for dividends, sir.
Once more.
Sir, I have a doubt in the dividends. Like it's given dividends is after including the expenditure of
I
9.
understood that. I actually read it as it is, but give me some time. I'll see the suggested and revert. If at all there is a correction, I'll make the correction.
Okay. Because I give an overall adjustment of 1.6.
Yeah, fine. That difference in our answer to the extent of 290, please hold it back.
Okay.
Now, computation
Sir,
of total income. For house
sir,
property, unrealized rent taxable in the year of recovery, standard deduction should be provided. Business income as computed. Other sources 115 BBD 160. I know that a difference can be there. And gross interest, because they have said net interest, we need to gross up. 10% is the normal TDS rate. We gross up and find out the total income and provide 40,000.
sir, can you show the depreciation calculation?
Once more.
Sir, can you please show the depreciation calculation? 28. Sir, like, shouldn't we just take the depreciation for just 3 lakhs alone?
No. They have said specifically they have excluded item number 3. See, you are carrying the thing of the last time we did the same adjustment. In that case, they clearly said only additional depreciation is not charged. Normal depreciation is charged. So we reverse the normal depreciation for 3 lakhs and also included. Here they have said the question, if I read the question, depreciation exclusive of the depreciation on input, not exclusive of additional depreciation, exclusive of depreciation on the imported machinery, which is mentioned in 3.
Okay. Sir, so if it is exclusive, also shouldn't we charge it for the full 98 lakhs?
92 lakhs, 95 minus 3.
Okay. Oh yeah, profit. Okay, profit. Understood. Okay.
Shall I proceed? Only total income, I think it is they have asked for.
Yes, sir.
Total income, yeah. I'm going to the 27th question. Anustup Chandra Flour Mills Limited, a domestic company engaged in manufacture of wheat flour, furnishes the following information. Net profit 77 lakhs after considering the items listed under 2 to 6 below. Company is a member of Vishnu Foods and Co. A AOP in which members' shares are determined and their shares in profit and loss are clearly known. The entire income of AOP is from business activity. During the year, the company derived 9 lakhs from the AOP, spent a sum of 90,000 for earning such income. Company has provided for income tax, including 234 BC 3 lakhs and 5 lakhs towards loss in foreign subsidiary. Amount debited to the statement of P&L towards the interest to a public financial institution 12 lakhs. 4 lakhs was paid on, 22 it should be. 12/12/22 it should be. Not 21, it should be 22. Company committed breach of building norms while extending the factory building. The city corporation initiated proceedings against the company and the company settled the issue by paying compounding fees of 1 lakh. This amount forms part of general expenses of P&L. In the administrative expenses, the company has debited 70,000 towards fee for delayed filing of TDS under 234E. The company has credited revaluation surplus of 10 lakhs on fair valuation of asset under Ind AS 16 and 38 to other equity. The company has credited 5 lakhs to other comprehensive income on fair valuation of equity instrument in which the company has made investment. During the year, the depreciation charged as per books of account of the company is the same as allowable under income tax law before considering the provisions of the company proposes to adopt this practice consistently in the future years. You are required to compute the income tax payable by the company for the assessment year. The company is an Ind AS compliant company. The turnover was 50 crores. My dear friends, it's a whenever they ask you blankly compute the income tax payable without the word ignoring math, you need to work out 115
Math,
JB
as per
also.
math and normal provision.
I'm unable to listen.
As per math and as per normal provision. Both.
Yeah, as per normal provision, as per math.
Sir, this note 50 crore regarding to surcharge 12%. If a domestic company exceeds previous year turnover 10 crores above, charge 12% surcharge.
The note is for the rate of taxation.
Okay.
25%.
It includes surcharge 12%, sir.
Surcharge is only if the total income exceeds 1 crore. What will be the effect of first adjustment in normal provision and in MAT?
Share of profits.
Normal provision considered as income and taxable at special normal rates 25% of the company.
Illa konja purmiya padi Raja, purmiya padi.
The share of profits will be exempt.
Share of profits
Share of
excluded
profit
from
exempt,
normal
sir.
income and expenditure is disallowed, sir.
Sir, we need to list 9 lakhs and add 90,000.
Very good answer. Be it normal provision, be it 115 JB, be it normal provision, be it 115 JB, share of profit is not taxable. Share of profit is not taxable. Expenditures not allowed. Share of profit not taxable. Expenditures not allowed. Third adjustment.
Provision for tax.
Third adjustment.
Sir, add up 8 lakhs. Sir, is it correct, sir? I'm not. Sir, it's 62,000 for income tax interest, then 3 lakhs and 5 lakhs towards share and loss. Is it click? How do we read?
Sir, the company has provided income tax for rupees 3 lakhs and 5 lakhs towards share of loss of foreign subsidiary. That 3 lakhs include 62,000 of interest. That's how it should be read.
So provision, all provisions, 8 lakhs will be added back
In
to the next
Business
net
income,
profit.
not business income, sir.
oh, okay. In normal
Both.
as well as 115 JB, yeah.
Yes, sir,
Oh,
yes.
sorry.
So I did that. So
Not
I added
about
both.
15 kg.
Sudha, you are giving me some answer.
No, sir, I didn't compute 115 JB, sir. I just did normal income, sir.
Okay.
I
I
added back
did
8
only
lakhs.
115 kg.
I added back 8 lakhs to the normal income, sir.
Okay. So, coming back, 3 lakhs and 5 lakhs. Both should be added back in normal also as well as 115 JB. 3 lakhs as well as 5 lakhs has to be added back both in normal provisions and in 115 JB. Provision for tax is not allowed. Tax includes all components of tax. Provision for loss of subsidiary not allowed. So both the 3 lakhs and the 5 lakhs has to be added back both in the normal provision and in 115 JB computation. Interest to financial. Interest to financial institution 12 lakhs, 4 lakhs not paid within due date.
The rent. We
4
don't
lakh
have-
disallowed, sir. 8 lakh we can allowed it
Okay.
in normal provision.
That is
Sir,
the answer I
I
want,
think-
Venkatesh. 4
sir,
lakhs disallowed only under normal provision. Nothing is disallowed under 115 JB. 115 JB is format based. Format
Sir,
does
I
not
think the
have
question-
this 43B provision and all. So 4 lakhs disallowed under normal provision. Nothing is disallowed under 115 JB.
Sir, I think in the question it should have been 12/12/2022.
One minute, I'll take Antonio's doubt and come to your other doubt. Yeah, Antonio.
I'm not. So I think the question should have been 12/12/2022. I think.
That's what I agree with you. அதான் இப்போ படிக்கும்போது சொன்னேன். It should be 12/12/2022. It should be 12/12/2022, not 2021. It's my mistake. I didn't correct it here. 12/12/2022, please. Yeah, Sudha, I'll take your doubt now.
Since the date was given as 12/12/21,
Yeah, I understand
allowed
if you have
4
made
lakhs
that.
and disallowed 8 lakhs, sir.
Yeah, fine. Yeah. Company committed breach of building norms while extending the factory. 1 lakh compounding fees paid.
Allowed in this thing and normal income. In MAT, it's not allowed.
Yeah, why?
Isn't it in the nature of a penalty, sir? So disallowed in 1 lakh.
Why do you think it is in the nature of penalty, Sudha?
For breach
No,
of building
no,
norms.
sir, it's not allowed.
No,
I didn't allow
wait,
it.
Antonio. Wait, Antonio. Solunga, Sudha.
I thought they have committed a breach of building norms. Already they would have got the approval, but they have committed the breach. So I treated it as a penalty, sir.
Sir, I've not done anything. It's an ordinary course of business.
Okay.
No one is.
Yeah, okay. Yeah, Sudha is correct, but I was waiting for that one answer. Millennia developers case.
Yes, sir.
Millennia developers case. Okay. Yes, your answer is completely correct, Sudha. Millennia developers case, they said the same words which you have used, they have used. Okay. That is violation of norms. This part takes the character of penalty. This part takes the character of penalty. This is the same case law. Same wordings which you used now is used there. The description of compounding fees or regularization fees is in the case of violation of law, which is nothing but penalty. Your answer is absolutely correct. If you can quote this case law, well, otherwise also it is perfect. 70,000 TDS violation, TDS filing violation.
Sir, we need to add after in the this is the Ind AS adjustment. So we will add revaluation and section 16 and 38.
Raja, I'm in sixth adjustment, Raja. I'm in sixth adjustment.
Allowed, sir, 234.
Yeah, there is nothing to disallow it. It is not your TDS. I said I will come to 234E and speak about it. So as of now, allow. And I want to tell you again, this 1 lakh is disallowed only as per normal provision. This 1 lakh is disallowed as per normal provision, not as per MAT, not as per MAT computation. 7th and 8th adjustment will have no impact. No adjustment can be carried out for revaluation surplus arising out of Ind AS 16, 38 and 109.
Sir, but shouldn't the revaluation be taken off? Because you said revaluation is not a concept in income tax rate.
Paraja.
That Ind AS revaluation, shouldn't it be taken out?
Take 1 minute.
It is already credited, sir. So
No, it's credited to revaluation surplus, not net
the
profit.
company
okay,
has credited revaluation surplus of 10 lakhs on fair valuation of assets. The company has credited 5 lakhs to other comprehensive income on fair valuation. This is after that. I told you Ind AS, the net profit is before adjusting Ind AS items. Ind AS items will be separately adjusted, which we call it as other comprehensive income. If it is anything other than revaluation surplus or fair valuation of equity instrument, I will take it. Okay. If you remember the format also, okay, 1 minute. If you remember the format also, credited should be added. Income that is credited to OCI, which will not be reclassified. However, this will not include. So, you should not consider it. You should not consider it. It is not credited to P&L. It is credited to other comprehensive income. I made this mistake without. It can be allowed, but this is the answer I am getting.
Just 1 more minute, please.
we will together do 28th question. I was unable.
1 second, sir.
Raja?
So 1 second, sir.
Yeah.
Just finish.
Take your time. Take your time. Shall I progress? Again, none of the adjustments is such that you don't know it. You don't know it. Okay. I'm only believing, thinking, and very optimistically looking at it that you are completely confident about PGBP up to whatever we are completing up to today. It should not at all challenge you. It is just telling you that it is all repeated. I'm working out past 10 years paper. So you can imagine that year's case law, that year's amendments. Apart from that, because if you look at this adjustment, no, that in the previous question we saw cooperative society. Okay. In this year only, 43B included cooperative societies. Till that time, scheduled banks and financial institutions. They included cooperative societies, okay, as a separate line item. They included 115 BBG. So whenever there is an adjustment, whenever there is an amendment, whenever there is a case law, that adjustment will be unique in that paper. All other adjustments will be copy paste of past adjustments. Shankar Limited is engaged in the manufacture of footwear and leather products for the past 8 years, reported a net profit of 272 lakhs as per the statement of P&L for the year ended. The company was subject to 44AB. The net profit is arrived at after debiting or crediting the following: depreciation, sundry creditors, whose amount of 32 lakhs was outstanding since long time, has been settled at 26 lakhs based on compromise of settlement. The amount waived has been credited to P&L account. Employer contribution of EPF 3 lakhs of March was deposited in July. Interest debited 30 lakhs includes interest on term loan 25 lakhs, very important adjustment, underline, of 25 lakhs availed on 1/4/21 at 12% per annum towards purchase of machine. When we come to the machinery, I will talk more about it. Payment of 30 lakhs to A&Co, a subcontractor, for processing raw leather without deducting tax at source. 20 is for material and 10 lakh is for labor. So 30% of 10 lakhs will only be disallowed. When I am teaching you 194C, I will tell you again this, that for the goods portion, you need not deduct tax at source if it is separately shown in the invoice. If it is separately shown in the invoice. If there is an invoice totally for 30 lakhs, then 30 lakhs you should deduct tax at source. If they have clearly given the split for goods portion and services portion, only for the services portion, you need to deduct taxes.
Okay, sir. I did the opposite.
The company has not made provision for an amount of 12 lakhs, being a fair estimate of the amount of to workers towards periodical wage revision once in 3 years. Any idea? ICDS 10 says,
Allowed in the normal case of business.
ICDS 10 says any provision made on a scientific basis and on the basis of past experience will be allowed. This 12 lakhs will be allowed. The written down value of the assets before allowing depreciation as per income tax law: factory building, plant and machinery 170 lakhs, inclusive of 30 lakhs of machinery acquired and put to use on 1/11/21. Here is the link for that borrowing cost. Here is the link for that borrowing cost. What is that link?
Interest.
Interest 30 lakhs.
To use only November.
Till the
So
date
till then
it is
bond
put to use, it is should be added to the
25 lakhs into 12% for April, May, June, July, August, September, October, 7 months. For 7 months should be capitalized. Repeating, 25 lakhs into 12% for 7 months should be capitalized. Balance only can be taken as revenue. And the machine is put to use on 1/11/21. So you should charge 7.5% depreciation, 10% additional. May be
Sir,
noted that the above values have been duly recognized while providing. Sulu Raja?
sir, can you explain that previous adjustment again, the 12 lakhs which you were saying?
ICDS 10 says, whenever we are making a normally provisions are disallowed, but
Yes, sir.
provisions based upon scientific basis and past experience will be allowed.
Sir, but isn't it like revaluation, some similar
No,
to revaluation?
sir, every 3 years there is a wage revision taking place. 3
Okay,
years is
okay.
over, wage revision is being negotiated. I am making a reasonable provision of some 12 lakhs. It has nothing to do with revaluation.
Okay, okay. So after this, can you show like what explanation to write for this?
I mean, we have done this ICDS 10 நிறைய எழுதியிருக்கோம் ராஜா.
Okay, okay. ICDS 10.
Provision for warranty. Any provision made on a scientific and based upon experience will be allowed. இது வேஜ்க்கு நம்ம ஒரு வாட்டி எழுதியிருக்கோம்னு நினைக்கிறேன்.
Okay, okay.
Any provision with reasonable certainties will be allowed. We have written this, Raja. You can be sure of. During the year, the company employed 24 additional employees. All these employees contribute to RPF. 12 out of 24 joined on 1/6 on a salary of 23,000. 4 joined on a salary of 26, and 8 joined on for a 20,000. The salaries of 2 employees who are joined on 1/6 are being settled by bearer check every month. Do we know what for this adjustment is?
80 JJAA.
Very good. 80 JJAA. That's a very good way of understanding. So, during the 24 additional, 12 out of the 24 were admitted for 23,000. Are they eligible employees?
Yes, sir.
Yes.
10
Salary
of them
below.
are eligible employees.
Okay, 2 reserved.
2 are paid in cash. So 10 of them are eligible employees.
Yes, sir.
10 months salary, 23,000 into 10 months into 10 employees into 30%. The
23
remaining
lakhs,
4,
30%.
though they are employed for more than 240 days, but their salary is more than 25,000. And for employees on 111, we will not take. Sales include 5,000 leather bags sold to a firm for a related party at a price of 1,000 each. The selling price to others are 1,300. Increase your income by 300. 5,000 into 300. 5,000 into 300. Employees' contribution of 3 lakhs recovered from their salaries for the month of March and shown in the balance sheet under the head sundry creditors was remitted on 31st May.
Treat it as income.
Treat it as income
Beyond
respective due date. Compute the total income and tax payable. The turnover of the company for the year ended was 52 crores. Ignore man.
Sir, but what is the respective due date? Any idea? That's for this
15th of the
PS.
subsequent month.
Okay, okay.
I hope you can work out the answer. Okay, I don't have the answer right now. Tomorrow I will work out the answer, or tonight I will work out the answer and post it. I don't want to waste the time from the top again, all these things. Okay, try to work out the answer. I will also work out and post it in the link. 29th question. XYZ Private Limited, located in Mysore, is in the business of manufacturing confectionery items, which is listed. The company has also set up a chocolate manufacturing unit in a backward area of Telangana. There were 2 extra deductions till financial year 1920. Now it is not there. Statement of P&L, 500 lakhs after debiting or crediting the following. Items debited. Depreciation based on useful life of the asset, 300 lakhs. Repairs and maintenance expense include 20,000 spent on air conditioner installed in the residence of a director.
not allowed.
Not allowed.
Disallowed, sir.
Disallowed. Amount of 10 lakhs was spent on salaries and material for scientific research.
100%. Sir,
Allowed.
except
100%
perquisite.
allowed.
Except perquisite, it is not.
Raja?
Except perquisite for a tax. Perquisite is
no problem. Yeah. Amount of 10 lakhs was paid to an employee on his voluntary retirement.
1/5 allowed.
1/5, sir.
Add back 10 lakh,
10
allow
lakh,
1/5. Add back 10 lakh, allow 1/5. We will add 10 lakh and allow 2 lakhs. Purchase of raw material include purchase of wheat in cash for 20 lakhs from a mandi on different date exceeding 10,000 per day.
Allowed, sir.
Disallowed.
Agriculture.
Allowed, sir. Allowed.
Allowed, sir.
Why
Rule
it is
60.
allowed?
Rule 60D.
Rule 60D, payment to an agriculturist. Payment to an agriculturist is allowed. I mean, not disallowed. The company has paid 5 lakhs as regularization fees to the Municipal Corporation of Mysore to regularize the deviation from the sanctioned plan.
Millennia case.
Millennia Developers case disallowed. Millennia Developers case disallowed. The company has capitalized glow sign boards installed in the office premises or dealers
Oriental
premises.
Ceramics.
Raja?
Oriental Ceramics case.
Oriental Ceramics allowed. You should reduce 10 lakhs. It is allowed. This 10 lakhs is allowed. Closing stock includes 1,000 pieces of imported machinery spares at its landed cost as on the date of import at $20 per piece. Exchange rate on the date of import 68. Exchange rate on 31/3/22 70. The market value was on 31/3/22
This I have no idea, sir.
Sir, it's considered as a revenue expenditure.
Okay. There is a difference between treatment under 43A and 43AA.
Yes, sir. Assets, other assets. So one thing
For assets, I will only take date of transaction and date of payment. For any other things, I will record the gain or loss as per accrual basis. In this case, it is not an asset, it is an inventory. It is an inventory. $1 into number of pieces into 70 can be treated as expenditure, but it will not have any impact because it will also add the closing stock. The impact will be nullified. The impact will be nullified because there will be a proportionate increase in the closing stock also. The impact will be nullified because there will be a proportionate increase in the closing stock also. Okay, so the forex fluctuation will be only possible if they are sold, for the sold pieces, not for the closing stock pieces. You can add it and add the closing stock, or write a note and leave it. One of the sundry creditors for supply of rice flour was settled for rupees 25 lakhs as against 30 lakhs due to him. The entire amount was offset against a recoverable from a sister concern.
Deemed income.
Deemed income. That 5 lakhs should be treated as deemed income. That 5 lakhs, please treat it as deemed income. Written down value of the assets: factory building 10% depreciation, plant and machinery 1000 lakhs, new plant and machinery installed on 1/12/21 300 lakhs, and on 1/5/21 600 lakhs. For this, I will get full additional depreciation for the second half of the alleged. In that year, the entire benefits are different in the year in which question came. Machinery was sold to Messrs. ABC Limited on 1/4/2015 for 25 lakhs, were reacquired for 50 lakhs. What is the provision?
Additional depreciation not allowed for.
Additional depreciation not allowed. Accepted.
Sir,
cost of reacquisition, whichever is less, sir.
We should take that for providing depreciation.
திருப்பி சொல்லுங்க சுதா, you were saying something. Somebody was
The written down value on the date of transfer or the cost of reacquisition, whichever is less.
Superb. Thanks, Venkatesh. Thanks, Sudha. 25 lakhs should only be taken as addition. 25 lakhs should only be taken as addition. Written down value on the date of transfer or reacquisition cost, whichever is less, can only be taken as cost of addition. That is also correct. We cannot claim depreciation is also, additional depreciation is also correct. Lorries and vans, office equipment, computers. Compute the total income ignoring the MAT. Please read through. If you have a doubt, ask me.
Sir, what about that imported machinery spares that are included in the closing stock? Sir, should we provide depreciation for that, sir?
No, it is not. It is not an asset. It is more of spares, machinery spares. There is no depreciation for that.
If it is unique nature, it should be added back.
Yes, it is unique nature, it should be. This is more of consumable stores. Can you please put the mic on mute? Other than asking questions, please put the mic on mute. Okay, I have already done that question. Okay, I need to just post it properly. I will do that. Okay, I will do that, and I have already done this question, but last time it was 17.5%. Okay, additional depreciation was 35%. I need to make those adjustments, but I will post the answer for this question. For all the questions, I will post the answers. Question number 13. MP Limited is engaged in the manufacture of textiles. Statement of P&L 560 lakhs after debiting or crediting the following: depreciation, industrial power tariff concession 5,40,000 received from government credited to P&L account.
Sir, it's like a subsidy from government. We consider it as an income. So nil adjustment.
Yes, no adjustment. It is an income, general subsidy, and subsidy for non-depreciable assets or income. Only for subsidy for depreciable asset should be adjusted with the cost of the asset. Contribution of 2.5 lakhs to a scientific laboratory functioning at the national level with the specific direction that the amount should be used for scientific research program.
100%.
100%. Profit of rupees 8 lakhs on the sale of land to AVM Limited, a domestic company, the entire shares of which are held by the associate company. The plot was acquired on 30th June.
It not considered as a transfer, sir.
Okay, first I will take it out while computing business income, and it will not be considered as a capital gains also. Transfer of asset by holding company to 100% subsidiary company or vice versa shall not be regarded as transfer, provided the transferee company is an Indian company. Provided the transferring company is an Indian company. In this case, it is AVM Limited, a domestic company. So it will not be coming under capital gains also. Repeating the adjustment, while computing business income, reduce 8 lakhs. In capital gains, we should write this is not a transfer. Transfer by holding company to its 100% subsidiary company or vice versa will not be treated as transfer, provided the transferee entity is an Indian company. Payment of 3.5 lakhs towards transportation of various materials procured by one of its units, Messrs. Bansal Transport, a firm, without deduction of tax at source. The firm opts for presumptive taxation under section 40A for AE and has given a declaration. It also furnished its PAN for tender document.
No deduction.
It is allowed, sir.
It is allowed, no disallowance. Where the transporter gives PAN and a declaration, tax need not be deducted at source. Bonus paid to the staff include 1.5 lakhs, which was provided for in the books of 31.3, but has been paid in August 22.
Disallowed and allowed in subsequent year.
அடி வாங்க போற படவா ஆகஸ்ட்க்கு எதிரா அவனுக்கு
Oh, sorry, sir. allowed.
allowed.
Only
If it is beyond September, you should have that confusion. It is paid in a fully allowed. Okay, 43B says it should be paid within 1 month prior to the due date of filing returns, which is September 22. It is paid in August 22, allowed. Interest of rupees 15 lakhs paid on loan taken specifically for purchase of plant and machinery. Out of this, 5 lakhs is up to the date of putting it into use.
5 lakhs is
capital.
5 lakhs should be added. A debtor who owed the company amount of 20 lakhs was declared insolvent, hence written off by debiting P&L. Allowed. That's allowed. Okay. 5 lakhs being additional compensation received from the state government to an interim order of the court in respect of land acquired by the state government in the financial year 16-17. It will go to capital gains. So reduce 5 lakhs while computing business income. Reduce 5 lakhs while computing business income. This will go to capital gains.
So one doubt. So in this case, capital gain, I mean this year only additionally we are receiving a compensation. So in this case, directly 5 lakhs will be taxed, is it? Under capital gain.
If there is any legal charges, it will be allowed as expenditure. Otherwise, additional compensation becomes fully taxable.
Fully taxable under capital gain. Thank you.
In order to expand its overseas business, the company planned an online advertisement campaign for which it engaged a London-based company not having permanent establishment and paid rupees 5 lakhs for services availed. No tax was deducted by the company. Disallow the entire 5 lakhs. Disallow the entire 5 lakhs. In your notebook, you write here, or in your material, you write here and keep. I know where you will understand this. You write here and keep. Refer equalization levy discussion. This online advertisement comes under equalization levy, which we will study in international taxation. At that time, I will tell you that this is disallowed if that equalization levy is not paid. Now, as of now, 100% disallowed. Please write here or somewhere make a mark and keep saying refer equalization levy discussion.
Sir, one doubt, sir.
Solunga.
I don't think
Sir, we studied that if they don't have a permanent establishment, TDS need not be
with you. The TDS provision la varadu, I accept with you, but this comes under, that's why I said equalization levy.
Okay, sir.
You are correct. In Maruti Suzuki case, Wiscraft International case, it is held that where it is not treated as income of the receiver, it will not be there is no liability to deduct tax. I agree with that, but this adjustment, because of this word online advertisement, okay, you will understand in international taxation. 2 lakhs paid to a consultant for expert opinion on new business setup. Disallowed. It is not for the existing business. Disallow it. Disallow it. It is not for an existing business.
Sir, but it is considered as preliminary expenses for
it is only when the new business commences.
Oh, okay, sir.
Normal depreciation computed at only normal depreciation 71 lakhs. Is there any additional depreciation which needs to be? There is one. For this 5 lakhs, we need to reverse. For this 5 lakhs, we need to reverse Remember that normal depreciation we need to reverse. Debentures of the face value 1,500 lakhs having a 5-year tenure was issued at a discount of 3% subscribed in full.
I have no idea.
ITC Limited. Issue expenses of debentures, discount on debentures will be allowed. ITC Limited. Issue expenses of debentures will be allowed. The company received a bill of rupees 3 lakhs from a supplier of cotton in March 21. The bill was omitted to be recorded in the books in March. Actually, this should also be March 22, please. This should also be March 22. Payment against the bill was made in April and necessary entries were made in the book. The same has been considered in closing inventory while valuing. We should reduce 3 lakhs. We should reduce 3 lakhs. In income tax adjustment statement, we can reduce it. In income tax adjustment statement, we can reduce it. We should reduce 3 lakhs. The company has purchased 1,000 bales of cotton for rupees 5,000 per bale from a firm in which majority of the directors are partners. The normal selling price is 4,600. 40A subsection 2. 40A subsection 2. 400 into 1,000 bales will be disallowed. 4 lakhs will be disallowed. Payment to relative in excess of fair market value. Any doubts, friends? I will do the detailed answerings also and post it. Every question will have a very detailed answering. I will post the same. Question number 31. Premium Industries Limited, a domestic company engaged in manufacturing of automatic gearless cars. Okay. In the state of Tamil Nadu. The net profit for the year ended revealed 1 crore 47 lakh 50,000 after debiting or crediting the following: depreciation as per book, one-time license charges, we know what to do, purchase the spare parts value of 96 lakhs from the company in which directors have substantial interest, 40A subsection 2, new plant and machinery acquired for 75 lakhs, and payment of 10 lakhs made by barrel check and the balance by way of RTGS. Cash subsidy of 15 lakhs received from state government on acquisition of generator was credited to the statement of P&L. So 75 lakhs minus 10 lakhs minus 15 lakhs should not be credited to P&L. If the subsidy is towards a depreciable asset, it should be adjusted with the cost of the asset and not credited to P&L. So adjustment. Legal expenses incurred for issue of bonus shares 6 lakhs allowed. For right shares not allowed. Bonus shares allowed, right shares not allowed. STCG on transfer of a capital asset being equity shares in a company in which STT is paid. It is taxable under capital gain, 15% rate of taxation. LTCG arrived at after taking indexation benefit of zero coupon bonds, 20% taxation. Additional information. Depreciation eligible under 32 before considering adjustment of any of the items is 38 lakh. However, include 18 lakhs towards depreciation on block of assets which are entitled at for 45%. During the previous year, the company transferred equity shares for a consideration of 22 lakhs which were acquired through preferential issue made by an Indian company for the approval of SEBI. Acquisition cost okay, so within 1 year it is transferred. Okay, so entire 10 lakhs is capital gains. Entire 10 lakhs is capital gains. The company opted for concessional rate of tax and exemption from MAT under 115 JB. Compute the total income. The company opted for concessional rate of tax, which means the company has opted for 115 BAB, which means the company has opted for 115 BAB. The company has opted for 115 BAB. Why is this? You cannot claim more than 40%. Depreciation maximum rate is only 40%. Depreciation maximum rate is 40. Old question, I'll tell you why 45% for a minute. An asset to develop automobile sector, they said in 2000, from 23rd August 2019 to 31st March 2020, from 23rd August 2019 to 31st March 2020, if you buy an asset, motor car, use it for commercial purpose, rate will be 45%. Rate will be 45%. But for in that year itself they clarified, that's why it's not this year's question. For optional tax regime, you can only claim 40%. For optional tax regime, you can only claim 40%. So 45% cannot be claimed. 18 lakhs divided by 45 into 5% should not be considered. Into 5% should not be considered. So, a business income will be taxable at the special rates of 15% plus 10% plus 4%. Their other incomes will be taxable either at special rate or 25.168%. Other incomes will be taxable either at special rate or 25.168%. Actually, I'll do this question, but
I was going to ask, can we do it?
Raja?
It's little complicated.
Yeah, I'll do this question. I will do this question. I have only one request. It's painful. I'm unable to continue. My pain is taking over my enthusiasm of doing. I definitely want to do this question, but it is I'm getting a lot of pains for the past 2-3 days. So I will do this question tomorrow morning, friends. Kindly bear with me. I'll meet you tomorrow morning. Tomorrow morning also in online only. I cannot be traveling. I'm advised to be at home. Okay. Tomorrow morning also online only. By 6 o'clock or maximum 6:15, I'll start the class. I will start the class by working out this question. I will definitely want to work out and show you how this question is. It's not complicated. It is simple. Only thing is the company has opted for concessional tax regime. So I need to work out and show you what income at what rate they are taxable. So kindly bear with me for one day. I will work at the solution tomorrow morning and complete the chapter and take you to assessment of charitable trust by tomorrow morning, friends. Sorry, I have to wind up because of my health. I will meet you at 6 or 6:15 tomorrow morning. All the best, friends.
Sure, sir. No problem.
Namaste. Good morning. Uh, Yesterday, we had a couple of questions. One is question number 28. Did anybody work out that question? Question number 28. Just to check the answer. Especially the depreciation part. Venkatesh, Paniyappan, did you work? Sriram, Sudha?
28, I did.
Huh?
28, I did too.
I did, sir. I did
28.
28. Sir, I did the
Okay.
28 depreciation part.
Okay. See, I only request you to just check the answer later whenever you find time. That the 28th question and also the 29th question. Just check the answer whenever you find time. If at all I have done any calculation error, please let me know. Please let me know so that I can correct it. Otherwise, I think the answer is right. Okay, just check it. Okay, if at all I have made some additions or deletions. Okay, now I'm going to the question which we let it open, saying that we will do that question in the classroom. That is question number 31. Okay, this is the question that appeared in the July examination. Okay. uh, okay, this is the question that appeared in the July last examination. Premium Industries Limited, a domestic company engaged in the manufacturing of automatic gearless cars since 111 in the state of Tamil Nadu. The net profit as per the statement of profit and loss account revealed 1 crore 47 lakh 50,000. Depreciation charged in the books, one-time license obtained, purchased spare parts valued at rupees 96 lakhs from another company in which the directors have substantial interest, fair market value, new plant and machinery acquired on 1,775 lakhs and the payment of 10 lakhs were made by barrel check and subsidy of 15 lakhs received from state government on acquisition of generator which was credited to statement of P&L. Legal expenses incurred for issue of bonus shares 6 lakhs, legal expenses for right shares 8 lakhs. STCG on capital assets being equity in a company in which the STT is charged 15 lakhs. LTCG on transfer of zero coupon bonds 8 lakhs. Additional depreciation eligible under section 32 before considering adjustment of any of the items is 38 lakhs. This includes 18 lakhs towards depreciation on block of assets which were entitled for 45%. During 21-22, the company transferred equity shares for a consideration of 22 lakhs which were acquired through preferential issue made by an Indian company with the approval of SEBI. Acquisition cost is 12 lakhs. The company opted for concessional rate of tax and exemption from MAT under 115 JB. Compute the total income clearly stating each item. So the company has, we are going to do it under 115 BAB. We are going to do under 115 BAB. working note, we will start with depreciation. I will write a small note. As I told you, when this question came, there was something known as 45%. Okay, that's why. And it was an amendment in that year. Any of the asset, the depreciation cannot exceed 45%. No. Depreciation eligible under section 32 is 38 lakhs. However, for 18 lakhs, I have claimed 45%.
Sir, is it 40% the maximum eligible depreciation or
Yeah.
45? Yes, maximum eligible depreciation 40% or 45%?
Thanks, Rija. New plant and machinery acquired on 1/7/21 for 75 lakhs. Okay. Value of plant and machinery purchased on, okay, 1st July, 75 lakhs, less payment made in cash, payment made through unapproved modes, which will not be included in the cost of the asset. Okay, 10 lakhs. Okay, subsidy received 15 lakhs. Subsidy received 15 lakhs. Net asset value and depreciation at 15%. Net asset value is 75 minus 10 minus 15. Okay, depreciation at 15%. At 15%. Can I claim additional depreciation? Can I
Yes,
claim
sir.
additional depreciation?
Yes.
Huh?
Yes, sir. It's a manufacturing company. Yes, sir.
Yes. Okay. The answer is no, because I am opting for 115 BAB. Normally, yes, his answer is right. But I am going for optional tax regime. Since assessee is opting for, okay, alternative tax regime under 115 BAB, additional depreciation cannot be claimed. Additional depreciation cannot be claimed. Remember, no additional depreciation, scientific research capital expenditure specified as nothing can be claimed. Nothing can be claimed. Okay, right? Since I am consolidating depreciation for this license also, I will do the depreciation here itself. One-time license fees of 36 lakhs paid to foreign company for obtaining franchisee from 3011 put to use. Okay, intangible asset license put to use for less than 180 days, hence 12.5%. Value is 36 lakhs. So they have debited the machinery value.
Sir, is the entire machinery been debited to P&L?
Yes.
Or is the subsidy taken to P&L, sir?
That's what I saw. New plant and machinery acquired on 17 for 25 lakhs and payment of 10 lakhs made and balance by way of transfer through RTGS. Cash subsidy of 15 lakhs received from state government on acquisition of which was credited to state. Because the question starts with the terminology after debiting or crediting of following items. Okay. Anyhow, we will go and check the answer once after after we complete this.
Okay, sir. Okay.
During the year, the company transferred equity shares for a consideration of 22 lakhs, which were acquired through preferential issue made by an Indian company with the approval of SEBI. Cost of acquisition in 2021 should be 12 lakhs, assuming it is an STCG on which STT is not paid. Assuming, okay, it is an STCG on which STT is not paid because they have not clearly given. Okay. There is a reason why I am writing like this.
Because of the tax rate, no, sir?
Very good. Perfect understanding.
Sir, also in the question, should we change it to during 2021 in that adjustment?
Yeah, certainly you should change it to 2021.
Okay, sir.
Please understand how we are working out tax. Computation of tax and assessee has opted for 115 BAB. Okay. On business income at any idea? You remember? 15%. It's a manufacturing concern. If it is BAA, then it is 22%. Okay. Here it is 15%. Solunga. On STCG on which STT is paid, again at 15%, 8 lakh. On LTCG at 20%, it is not LTCG under 12AA. Sorry, I think I'm making a small mistake here. On other STCG at
25.168.
10% surcharge add பண்ணலாம் எல்லாத்துக்கும் சேர்த்து 22%. 22%. Section 115 BAB specifies that the rate of 15% is only applicable for business income. For all other income, it is either special rate or 22% is the base rate. So, this 10 lakhs
Sir, isn't 22% as base only for 115 BAA?
but if you look at it, okay, Rate of taxation 22%, 15. Income other than business income 25.68 will be the effective rate. 25.68 will be, that is nothing but 22% for non-business income. For business income only, I give the concession of 15%. For business income only, I give the concession of 15%.
Okay, okay, sir.
Just a minute. One minute, friends. 1 minute. I'll try to pick the question. This is the examination question. This is the examination question. I told you last attempt. Okay. You can see how detailed they are writing the answer. One-time license for franchisee is an intangible asset which is eligible for depreciation. Since one-time license fee for franchise has been debited to the statement of P&L account, the same is added back. 48 to disallowance. They have added back, Ananya, purchase of plant. Since it is a capital expenditure, it is not allowed. Legal legal expenses for bonus, legal expenses for rights, STCG, LTCG, subsidy. So 276. Depreciation, their total comes to 48 lakhs. I hope we are getting the same.
Yes, sir. We also got 48.
48 lakhs. And then STCG on transfer of listed equity shares, which is taxable at 15%, LTCG and STCG 10 lakhs. Their tax comes to 46,13,180. I think we are getting the same.
Yes, sir.
Yeah. In the addition, they have given, if I have an alternative answer, I'll read what they have given as additional. It is given the previous year 2021, the company has, that is the question appeared in the last year, Namaki for 21-22, when the question appeared it was 2021. It is given that during the previous year 2021, the company transferred equity shares of a company which it acquired through preferential issue made by an Indian company with the approval of SEBI. Cost of acquisition is 12 lakhs. The resultant gain could either be short-term or long-term since the date of acquisition and the date of sale are not mentioned in the question. The above solution is worked on the assumption that the shares are short-term, being shares on which STT is not paid at the time of transfer and therefore 22% rate. Alternatively, it is also possible to assume that such equity shares are STCG on which STT is paid at the time of transfer, in which case such STCG would be taxable at 15%. under section 111A, and tax liability would be 45,300. Further, it is also possible to assume that these equity shares are long-term capital asset on which STT is paid. In case LTCG, 1 lakh would be taxable at 10% under section capital gain exceeding 1 lakh would be taxable at 10%.
So this means we also have to write all the options.
Not necessary. Intention of the questionnaire, we understood that we put a tax rate they want you to correctly compute. So we can write it is assumed and leave that, not as such an elaborate note. Whatever, one of the assumption only we can take, and not that every assumption we need to work out the answer.
Okay.
One minute. So this is the recently concluded examination question. Okay. In everything, we know what are all the repeated adjustments. 40A2, 40A3, 40 TDS, 43B. They are not going above this. They are not going above this. Even if we work out another 15 questions also, we will come back to the same things only, my dear friends. We will come back to the same things only. So, we have worked out sufficient questions to ensure that we are very thorough with the PGBP chapter. Okay, both as a standalone chapter, we worked out some 40 questions, and then in our PGB, the assessment of firms, some 10 questions. Here some 20 questions. These are more than sufficient. These are more than sufficient to make you confident in PGBP and approach it with confidence. With confidence. Only thing is how the new amendments and adjustments will be incorporated, we will see. Do not worry how it will be incorporated, how it can be. But otherwise, there is nothing big to challenge in PGBP at all. Even in assessment of companies, 90% of the answer will be PGBP. Sometimes IFOS, especially the dividend from specified foreign company, okay, and there can be an optional tax regime question. I have to fill in only one question now, question number 3030, which I will also do and upload the entire Excel. By the end of today, we should have complete solution bank for our volume 1. Complete solution bank for our volume 1. I will tell you about what we have covered at the end of the day. Now we are progressing to miscellaneous areas. The most important section in the miscellaneous area is section 79, carry forward of losses of unlisted company. You can understand it as unlisted company, a company in which public are not substantially interested, private limited company, etc. Okay, before going to this section 79, I have a question to you on section 78. Can someone tell me what is the provision for carry forward of loss in the case of a partnership firm? That is in 78.
Loss due to the retirement of a partner cannot be carried forward in the next year.
Very good answer. I will elaborate it. Share of loss due to share of loss of retiring or deceased partner cannot be carried forward by the firm. Okay. Private limited companies, closely held companies are a glorified partnership entities. Private limited companies or closely held companies are slightly glorified form of partnership firm. Here they have a criteria. At least 51% of the voting power should be held by the same person. Once more, at least 51% of the whole voting power should be held by the same persons. Venkatesh, Sriram and Ananya are having a private limited company. Each one 33.33% share capital. There is a brought forward loss. Venkatesh sells his shares. The brought forward loss can still be claimed because the other two shareholders continuing holds 66 or 67%. Venkatesh and Sriram sells the share. The whole of the loss is lost. Proportionate kudalla. The whole loss is lost. At least 51% of the shareholders in the year of loss should continue to be the shareholders in the year in which set-off is planned to be claimed. This is only for loss and not for unabsorbed depreciation. A closely held company shall not be entitled to claim the benefit of carry forward and set-off loss if shares carrying at least 51% is not held on the last day of the previous year by the same persons who held shares in the year in which loss was incurred. 31st March 22, 51% of the shares should be held by same persons as that of the year in which loss has arisen. In the case of eligible startups, loss can be carried forward if at least one of the condition is satisfied, 51%. But I understand eligible startup, they get investments from various sources. All the shareholders of such company who held shares carrying voting power on the last day of the previous year or previous year in which loss continue to hold those shares on the last day of the previous year in which the loss is set off, and such loss has been incurred in 7 years. So even this 51% is not there because I know all startups, we all know they look for funding options. So majority of their shares will be sold or the fund will be available with the company. Let all the shareholders be there for 7 years. Then I will allow it. However, provision is not applicable if the change of holding is due to death of the shareholder, gift by the shareholder, change in shareholder which is a subsidiary of a foreign company as a result of amalgamation or demerger.
Sir, so in partnership, death of a partner will lead to similar circumstances, but in a company, death of a shareholder cannot will not be a reason for losing that loss.
I appreciate your understanding, but I will give you an alternative thing also as answer. In partnership, death of a partner does not mean that the legal heir obviously becomes a partner. He should be indebted. In company, death of a shareholder, obviously the legal heir becomes the shareholder. That's why they have said so.
Yes, sir. Okay. Yes.
Sir, even in partnership, if the legal heir becomes a partner, the losses can be carried forward, no,
Yes,
sir?
yes. For the same benefits. Question number 32. Vamana Private Limited has a share capital in the form of equity shares. The shares were held up to 31st March 22 by 4 shareholders C, D, E, F equally. The company made the profit and losses as follows. Assessment year 1718, 1819 and 1920. It should be 22 lakhs, not 12. The total should be 16 plus 6, 22 lakhs. The above figures have been accepted by the Income Tax Department. During the previous year ended 31/3/21, C sold his shares to A and during the year ended 22, D sold the shares to B. The profit for the past 2 years are as follows. 31/3/21, 8 lakhs before charging depreciation of 1 lakh and 31/3/22, 19 lakhs before charging depreciation of 1,50,000. Read through. Okay, only B has sold the shares. Sorry. C has sold the shares to A. C has sold the shares to A. So you can still continue to claim 75% DEF continues. So 75% of the shareholding is in the same hands. So 7 lakhs you will claim. Okay, total income is nil for that particular year. Okay, balance loss available for carry forward. Balance loss available for carry forward 16 lakhs minus 7 lakhs, 9 lakhs. This cannot be set off as 51% is not held by same persons. Okay. In FY 1920, what is that year of loss? B, C, D, B, C, sorry, C, D, E, F are shareholders, whereas in FY 22-23, 21-22, okay, that is on 31st of March 22, okay, A, B, E, F are shareholders. 50% of shares are sold off. So, brought forward loss is lost. So, you cannot claim. So, brought forward loss of this 9 lakhs cannot be set off. Brought forward loss cannot be set off because 51% is not held by the same people.
Sir, if the question had mentioned a loss in 2021 also,
You can claim that because the shareholders of BEF or AEF will be the same.
yes, sir. So for each year, I should see
31st March of the year of loss, 31st March of the year of set off, you should compare.
Yes, sir. Okay.
Now, I'm coming to one other loss which the class has to understand. That is loss of amalgamation. Loss of amalgamation. Okay. Can the loss of the transferor company be carried forward and adjusted by the transferee company? Repeating, can the loss of the transferor company be carried forward and adjusted with the transferee company?
Yes, sir.
Yes. But the answer is not a plain yes. Yes is a first answer. But the answer is not a plain yes. I will tell you why. Basically, I'll tell you why and then go into the law. If you say a blanket yes, what will happen is amalgamation will take place only for adjustment of losses. Only for adjustment of losses, amalgamation will take place. Like, there is a loss-making hotel and a profit-making software company. For namesake, the software company will amalgamate with the hotel company. For namesake. Very much possible. There are a lot of startups which are incurring losses. For namesake, profit-making companies will take over them. Very much possible. So, for namesake, amalgamation should not happen. Namesake means for the purpose of taking over the losses. Why should a software company amalgamate with a hotel industry? The only commonality between them should be chips. Otherwise, nothing. Why should a startup amalgamate or bigger company amalgamate? So the income tax law want to seal it. And the way they sealed it is such a manner, your answer will become no, it cannot. I'm honest. They have to take caution, but they took too much of caution. Set off of losses of amalgamating company. Amalgamation should be of a company owned by industrial undertaking, ship, hotel, banking company, and airlines operation. Reverse lane varai. It should be for airline operation, that is to facilitate the Indian Airlines with Air India. Banks, State Bank of India, all the subsidiaries of State Bank of India amalgamated with State Bank. Now you see Union Bank, Corporation Banks amalgamation. Okay, Indian Banks amalgamation. Ship, hotel, or it should be an industrial undertaking. First thing I want to nail into your mind for your practical world also is service sector amalgamation is not recognized for carry forward of losses. Repeating, please say service sector amalgamation except banks, airline operations, hotels, all other service sector are not recognized. Walmart takes over Flipkart. Not recognized. Byju's take over Akash. Not recognized in the sense for loss. Loss cannot be carried forward. These are not industrial undertaking. It should be an industrial undertaking. DHL and professional couriers, suppose if they amalgamate, you can amalgamate. But the losses of the transferor company cannot be carried forward by the transferring company. Amazon acquires lots of companies, but the losses cannot be carried forward. I have a very personal experience, okay? there was a big, what do you call, manpower company. Okay, recruitments there. Okay, manpower company, and they had lot of subsidiaries for specific manpower requirements. So they decided on a particular day, it is very difficult to manage all subsidiary. Let us bring it under one umbrella because they are in the process of sale. So it was just a call which lasted for 2 minutes, not even 2 minutes. So that CEO called me and asked, can the subsidiaries loss be taken over by us? It's a HR company. I said, no, sir, it is not an industrial undertaking. You cannot take over. இவ்வளவுதான் காலோடைய length. That's all. It's over. The call was over. After 8 to 9 months, I happened to meet that person somewhere very in a function. I don't even remember, in a function or wedding or some event. I met him. At that time, he came to me and said, yeah, you are right, that loss cannot be taken over. I said, yes, I was very sure. No, we appointed one agency for this, and they have presented a report after 6 months study. 6 months study, first word law, that this loss cannot be taken over. So at that time only you will understand that free advices doesn't have any value at all in your in our professional community. Okay, that's the biggest lesson I learned that day. I told him, sir, but he was saying, okay, you said, but still we thought we'll evaluate options. Okay, so coming back, please understand, industrial undertakings can only amalgamate. Service sector, they have specified what are all the service sector which can amalgamate. Right. So let's move to the next step.
Sir, sorry, I have one doubt.
So
in this question, in this provision, they're saying all industrial undertakings can take this exemption, but why wasn't it given for any subsidiary and holding company?
Industrial undertaking means manufacturing sector.
That's sir. Apart from this, why wasn't it allowed for all subsidiaries and holding company?
Why wasn't it? Because people will tax plan. People will amalgamate in the wrong manner. First year, 51% they will acquire the subsidiary. Subsequent year, they will make it a full subsidy. It's very difficult. People can easily manage.
But here also they can know, sir. They can do no.
For manufacturing company,
yes.
Yeah. I'm coming to you. Your question is right. So now, as Ananya was asking now, sir, okay, sir, 2 manufacturing companies can directly amalgamate, no problem, correct, sir? Conditions to be fulfilled by the transferor company. Conditions to be fulfilled by the transferor company. The transferor company should have been engaged in the business where the loss or depreciation is for 3 or more years, and 75% of the book value of asset should be held for a period of 2 years. So if your plant and machinery block consists of 1 crore, 75 lakhs of asset should be at least 2 years or more old. And you should have been in business for 3 or more years. Conditions to be fulfilled by the transferee company. Whatever assets you are taking over, right? At least 75% of the book value of asset should be held for a minimum period of 5 years. Angaye it is 2 years old. In the transferor companies itself, it is 2 years old. That asset which you are taking over, you should hold it for 5 years. You should not hive off that company. You should run that company for a minimum period of 5 years. You should continue the business of the company. Trust me, what is continuation of business is also said. You should have used at least 50% of the installed capacity. What is that machinery which is already 7 years old? Okay. So, you should have continued that business. If all these things are satisfied, then you can carry forward the loss for new 8 years. Only benefit is from that year you can carry forward is for 8 years. But if you violate the condition, then withdrawal will be there. That is, the year in which you are violating, the deduction will be withdrawn. For all these things, you need an honest person to certify, and you know whom I am talking about. So, amalgamation losses are not easy. In India, or not only India, majority, they don't want to encourage for loss sake amalgamation. It is better to amalgamate a profit-making company with a loss-making company than to amalgamate a loss-making company with a profit-making company.
Sir, which means indirectly they are saying that even the amalgamated company should carry on the same business
Yes,
as that of
good answer.
amalgamating.
Good answer, Sudha. அதுதான் நம்ம வந்து even they are recognizing only merger method, where all assets and liabilities are taken over, shareholders continue to be the same, and they continue the business of the transferring company. Same companies can only merge. Good answer.
So a footwear manufacturing company cannot amalgamate with the company manufacturing bolts.
Yes.
So that is here.
Yes.
Okay, sir.
Sir, but in business sense, in general business, companies would merge and try to save their loss-making company by amalgamating so that they can at least continue the business.
That is wrong. So, I mean, okay, subsidiary, if you fulfill all these conditions, fine. But law want to seal that intention. Amalgamation should happen because of business parallels, not because of loss parallels or set off of loss. Using this, don't try to evade.
Okay.
Number Aircel amalgamated, Vodafone Idea amalgamated, previously Hutch. All these cases, they said the losses cannot be carried forward.
நல்லதுதான் sir. Vodafone Idea and all is very bad.
Yeah, and not only that, majority of the amalgamations are not amalgamations or acquisitions, okay, where they don't want to provide the loss.
Okay.
So these are all the conditions for amalgamation. So actually, at this juncture, I want to tell you, business restructuring means 5 things. All of us in your notebook itself write and keep. Business restructuring means 5 things. A. Amalgamation. Amalgamation. We have studied part of it in PGBP chapter and other part of it here. Sorry, 3 places we studied. PGBP chapter, capital gains chapter, and assessment of companies. Please understand, amalgamation alone, I have not studied in one umbrella. PGBP chapter, we studied proportionate depreciation. And we always know the statement which I keep on telling, provisions of the transferee, provisions applicable to the transferor company will also apply to the transferee company as if the event has not taken place. In capital gains, we had a detailed discussion on what is not regarded as transfer. In that also we saw amalgamation is not a transfer both to the company and to the shareholder, provided the transferee entity is an Indian entity. For loss set off, we have seen this in assessment of companies. Please write and keep it. So first amalgamation, we have seen it in 2. Second, demerger. We saw it in capital gains itself, except proportionate depreciation. Capital gains liye, we read about demerger. What is the cost of acquisition? We also saw that. Cost of acquisition of resultant company, proportionate asset on the basis of asset taken over. We have studied this. Third is slump sales, which amended provision we studied in capital gains. Fourth is conversion of partnership firm into a company or sole proprietor into a company. Once more, conversion of partnership into a company or sole proprietor into a company. What is the main thing I asked you to remember?
51% of
Superb. 50%, 51% of the share capital should be held by the partners for a period of 5 years. And conversion of company into LLP. All these things we have studied both in capital gain and in assessment of firm. Okay, once more I am repeating for you to write down neatly. Business restructuring, அப்படின்னா 5 things. Amalgamation, we studied different places because I cannot load it in one place and show you. Okay, so we studied in capital gains also, in assessment of companies also. Demerger, we studied completely in capital gains, leaving the proportional depreciation part. Slump sales, we studied completely the amended provisions in capital gains. Conversion of sole proprietor or partnership firm into a company, capital gains plus assessment of firm. Conversion of company into LLP, capital gains plus assessment of firm. These are all the places we study.
So, just the second one, what is this?
Raja, amalgamation, demerger, slump sales.
Oh, yes, got it.
Yeah. Section 178, purely theoretical purpose, just for knowledge purpose. Okay, if you remember, vaguely remember the liquidation chapter in your accounts group 2 inter, or if you vaguely remember from your company law, the taxes, if a company is going on liquidation, the taxes due should be placed as preferential liability, overriding preferential creditor. So, if a liquidator is appointed, the liquidator has to communicate with the tax department. The liquidator has to communicate with the tax department what is your tax due. The assessing officer in his turn is bound to, after making such inquiry or calling for such information, to notify the liquidator within 3 months from the date of notice of the amount which in the opinion would be sufficient to provide for any tax which is then or likely thereafter to become payable. So the liquidator first writes to the assessing officer, sir, this company is under liquidation, I have taken over the assets And liabilities, I need to place you as an overriding preferential creditor. Can you tell me what is the tax due? Assessing officer has to communicate to the liquidator saying, boss, we have not yet completed assessment. There it is going on. But in our opinion, if you have such amount, please earmark such amount as tax. Then the liquidator has to ensure that the government dues are paid before payment of secured creditors. Before payment of secured creditors, the government dues are paid. Remember, if the liquidator fails to notify the assessing officer, okay, then he will become personally liable for payment of the tax because liquidator is like a director. I have also told you private limited companies are nothing but glorified partnership firms. Private limited companies are nothing but glorified partnership firms. In case of a private limited company, for any tax assessed by the company, okay, whether or before the liquidation, all the person who are director of the private limited company at any time during the relevant previous year shall be jointly and severally liable. In the limited liability clause அப்படி தூக்கி போட்டுருவாங்க. All the shareholders, all the directors, not as on 31st March of the previous year, you might have resigned in between also of the previous year, are jointly and severally liable for the tax dues. Hari, இப்போ சரியாயிடுதுல்ல Hari? Hari, are you there?
Yes, sir. Yeah, sir. Yeah, it
so,
is okay now.
all of them are jointly and severally liable. In fact, if you go deeper into the section, even public limited company, they see what type of negligence is there. Depending upon that they are making directors liable, but from the academic perspective, you need not go into it. Okay, so this is section 178 and 179. You know, already we saw in assessment of firm, in the case of firm, what is the liability on winding up? Partners at the time in the year of winding up are jointly and severally liable, which means I will catch hold of one partner. We wrote an answer also, if you remember. I'll catch hold of one partner and his bank account can be attached. It is his duty to collect it from the other partners.
Sir, what if the assets that are available with the liquidating company are not sufficient even to pay the tax amount?
You mean to say in section 178, you are asking me the question, right?
Yes, sir.
Insolvency, in which case only whatever is available can be taken.
எதுவுமே இல்லனா?
Is the liquidating company private limited or public limited?
In each of the cases, sir.
Private limited, the director's personal property are jointly and severally liable. In the case of public limited, depends on what type of negligence, but for your academic understanding, nothing can be done.
Okay, sir. Okay.
எப்போ லாஜிக்கலா யோசிச்சு பாத்தீங்கன்னா பிரைவேட் லிமிடெட் கம்பெனி யூ அண்டர்ஸ்டாண்ட் த ப்ரொவிஷன். பப்ளிக் லிமிடெட் கம்பெனி ஒன்லி இஃப் தே ஆர் மேக்கிங் லாசஸ் தே வில் கோ ஃபார் வைண்ட் அப். Why will there be any tax due? Whereas private limited company, people try to play around with the shield of separate legal entities. So this provisions.
Okay, sir.
We have seen both the case law. Rolta India 234 BC, metal chromium 54 EC with an institute notification that it cannot be claimed. Question number 33. ABC Limited was amalgamated with XYZ Limited. All the conditions are satisfied, which means assets, liabilities, 2 years, 3 years, 5 years, everything. ABC Limited has the following carry forward of loss as assessed till 21-22. Speculation loss cannot be carried forward. Remember, this is not from your industrial activity. This is not from your industrial activity. You cannot carry forward. Unabsorbed depreciation, unabsorbed expenditure, business loss, all these things can be carried forward. XYZ Limited has computed a profit of 140 lakhs for the financial year 21-22 before setting off the losses, eligible losses of ABC, but after providing depreciation of 15% per annum on 150 lakhs, being the consideration paid at which plant and machinery were transferred to XYZ Limited. The written down value as per ABC was 100 lakhs. What is the law telling? At what value can it take over?
At the value, the book value in the transferring.
According to section 43, books of accounts, you can do anything in your books of accounts, but when it comes to tax records, value to be recorded in the books of the transferring company can only be the value prevailing in the books of or tax records of transferor entity. The above profit includes a speculation profit of 10 lakhs. Compute the total income and indicate the loss.
Sir, all the conditions of section 72, it should be, no, sir?
Section 2(1)(b) defines what is amalgamation.
Oh, okay, sir.
One నిమిషం. I think I have given, that's why just checking once so that we are clear. These are all the conditions.
Okay, sir.
If I have not given, I will separately give you, do not worry. Somewhere I have written 2(1)(b) conditions. All assets and liabilities should be taken over. Assets and liabilities should be taken over only at book values. At least 75% of the shareholders of the amalgamating company should become the shareholders of that is different from accounting standards. I said I will just check once, but anyhow, this is important.
So can you scroll back, sir?
Yeah. This can be set off against this 10 lakhs. You cannot do the reverse. Speculation loss cannot be set off against general business, whereas general business loss can be set off against speculation income. I need to write one more note, please wait. So I'm getting a total income of 7,50,000 and the note I have to write is, okay, speculation loss of transfer or company cannot be adjusted by transferee company. Not only speculation loss, even losses like LTCG, STCG, only business loss can be set off.
Sir, so in calculation, my doubt is just about the segregation of business income and total income. So business income will actually be a loss of 2,50,000. Then I will be showing speculative income and set off the 2,50,000 loss against that, and total income will be 7,50,000.
Pakka.
Okay.
Question number 34. X Limited, a pharmaceutical company having accumulated losses and unabsorbed depreciation to be set off in the future for 130 and 250 lakhs as on 31/3/20 was demerged and 30% of its total assets were transferred to the resulting company XY Limited. How shall the accumulated losses and unabsorbed depreciation of the demerged company be dealt with in the assessment year of the resulting company when the same are not directly relatable to the undertaking transferred and when the same are relatable to the undertaking transferred? Read through. So it's a demerger question. In case of demerger, losses to the extent of proportionate asset transfer will be apportioned to resultant company. Losses to the extent of proportionate asset transfer. Okay, we will write asset transfer divided by total asset. In this case, they are directly given. In the given question, 30% of assets are transferred to resultant company. Hence, 30% of loss should be apportioned to resultant company. However, this provision is not applicable for unabsorbed depreciation. For both the answer, for both this is the answer. The apportionment will not change, or will be the same, sorry, will be the same whether the assets are identifiable or not to the transferred division.
Sir, I just have a doubt. Maybe I'm wrong. When we were discussing the provision, did you not mention that even proportionately the loss cannot be transferred?
Friend.
75% needs to be transferred, no, sir? 75% of the assets.
Friend. Demerger all the assets identifiable to that unit which is demerging shall be transferred to the resultant company. In case of other unit, the demerged company has the option either to transfer or not.
Okay, sir. I was talking about amalgamating. Okay.
Yeah. Amalgamation shareholders 70. Ingeyu shareholders undu.
Okay, sir.
If you remember, we did that question also. NK no that he would have 25,000 shares, he will get 50,000 shares. Question number 35.
So 1 second, come to the Excel.
Sir?
So 1 second, just
Sorry,
move to the Excel.
sorry, sir.
Sir, what does the last point mean? Sir? Yeah, sorry.
1 minute. The question asked is, when the same or not directly relatable to the units, when the same or directly relatable to the units. See, whatever is, whether it is relatable or not relatable, in proportion to the asset transferred, loss will also be transferred. Relatable or unrelatable is only to define what is demerger, and it has nothing to do with losses. Question number 35. Gomati Private Limited, a closely held company, is in the business of growing rubber. Tell me the provisions.
Sir, 35-65, sir.
Super. 35% is business income,
business
65% is agriculture income. Then?
Total profit or 40%.
Brilliant, Venkatesh. Brilliant, brilliant. According to 33 AB, the deposited sum is allowed 40% of profits or the amount deposited, whichever is less. Okay. Is in the business of growing rubber. The profit and loss account shows a net profit of 37.65 crores after debiting depreciation of 30 crores. The company has provided the following. Company has deposited 30 crores in a special account with NABARD. The company has a brought forward loss of 6 crores pertaining to assessment year. Mr. A, who continuously held 60% of shares carrying voting power since the incorporation, has sold his shares to B. Remember, it is a private limited company. And 60% of the shares are sold by one person. So section 79 comes and says, you cannot set off that losses. 51% saving. The company has an accumulated balance of 200 crores in the special account with NABARD. It withdraws 40 crores and utilizes as follows. Purchase of sprinkling machine allowed. Purchase of office appliances not allowed. Computers allowed. Construction of a godown at a cost of 1 crore near the rubber estate to store rubber. Repairs of machinery not allowed. On 31/3/22, the company has sold machinery which it has purchased on 10/5/2012 for 12 crores. The purchase of the said machinery was in accordance with the deposit. Depreciation allowable as per tax record 28 crores. Compute taxable and exempt income. Just the income of the read through. Recording. சொல்லு சொல்லு. So we find out the profit after making all the adjustment, and then 40% of profits or amount deposited, whichever is less is allowed as a deduction. Purchase of sprinkling equipments allowed. Purchase of office appliance not a qualifying asset. Only those assets which are used in the field or related directly should be allowed. This is not a qualifying asset. purchase of computers, qualifying asset, so allowed. Construction of godown, allowed. Repairs, not allowed.
Sir, purchase of computers, we assume that it is used for actual, it's qualifying it for in any case.
For the business purpose. They have said only one office equipment is allowed, that is purchase of computers.
Okay, okay, sir.
Irrespective of its usage.
Okay, sir.
Because the question says the sale, the asset was purchased in 2012 for 10 crores. No issues. You should at least hold it for 8 years. After that, if you sell, nothing, no problem.
Sir, why can't we assume that machinery is used for that agriculture purpose? Repair.
Which one? Which one? Which one, Raja? This one.
Sir, repairs.
Repairs is not allowed. Only purchase of machinery is allowed. Repair should be from your operations and it cannot be separately.
Okay, sir.
So this is how it has to be worked out. Very rare question this, but 33AB is a questionable area. We already saw. When we do a assessment of individuals, I'll work one more question on this. 33AB is a questionable area. ABA is only not questioned area. So with this, we complete assessment of companies. Okay, all the parts of assessment of companies. We know now to compute book profits with or without Ind AS adjustments. We now know 115 BAA BAB. We also now understood about detailed about separately as assessment of companies. Standalone provisions are going to be section 79, section 115 BBD, section 115 Q, that is buyback of shares. Like that, standalone provisions are there for companies also. Okay, this is the major point of our, that is, we call it as midpoint. Okay, 50% of our marks might be from whatever we have studied in our volume 1. Seemingly you will see 50%, but 30% is international taxation. So remaining 70 la 50% la, 50 out of 70 might be from whatever we studied in our volume 1. Leaving international taxation, if you study, 70% is going to be covered from our volume 1. We have covered all the case laws. We have understood PGBP at its best and capital gains, with exception, with what I know is pending is dissolution of a firm. That I know it's pending. Other than that, everything has been completed. Okay, by this time, I want you to feel strong in PGBP for 2 reasons. One, you repeatedly know what adjustment is asked for. எல்லா கொஸ்டின்லயும் ஒரு depreciation and depreciation less இருக்கும் நீங்க பாத்தீங்கன்னா, but every adjustment carries mark. That is one thing which is okay. Second, you also have touched upon the case laws at various places, spread across. Okay, because the forthcoming areas are going to be more special areas, lesser PGBP. PGBP is going to travel, but lesser PGBP, more of other things we are going to learn. So unless you are not feeling confident at this level of PGBP is something which I don't want that to happen. You should be now very clear about that particular chapter and its applicability across all sections, across all chapters with its standalone provisions. Okay. At this juncture, I am very sure, and I assure you that we have worked out all question papers also. I don't have the habit of putting within bracket which question paper, because I changed the year, I changed some data. 17.5% இருந்திருக்கும், அந்த depreciation மாத்திருப்பேன். 150% of scientific research, that I would have changed. That's why I don't put within bracket what question, which year it is. But I want to assure you that we have worked out almost all the questions of the past 10 years, so that you can feel very confident. That is why you see repetition of many of the adjustments. Okay, so when we are completing today the volume 1, I want only one thing from you, confidence, that I have understood this with greater amount of, and one more revision from my end, I know how to remember these provisions, how to understand present this provision. State the obvious is the examination theory principle. Okay, now in the direct taxation part, what is going to be the remaining important areas? Charitable trust, sure short question. TDS advance tax, sure short question. Assessment procedures. And then the last level of importance is assessment of individuals. I am not going to say that is how we are going to cover, but importance wise, as charitable trust, TDS. Then assessment procedure. With the faceless assessment, that takes a slight back seat, but still assessment procedure. Then assessment of individuals, along with some areas like tonnage tax for shipping sector, like that. Okay, so those things are what we are going to cover in the forthcoming classes. After that, we will look into international taxation. As of today, I'm lacking behind by 10 days. As of today, I'm lagging behind by 10 days. Okay, I know that technically I'm lagging behind by 10 days, but I'm very optimistic that we can make good the time in the forthcoming chapters. And I have sought your time till December 10th to complete the syllabus. With that, I think we should be, I'm not going to rush anywhere. International taxation, I want to ensure that you score 25 out of 30. I'm no exaggeration. Nowhere I'm exaggerating. I want you to score 25 out of the 30 marks in international taxation. For that also, whatever is required, I'm ready to do. So I'm not going to rush. At the same time, I'm very confident that we will be safely, smoothly sailing through all the arenas. Okay. With this, I end today's class. Okay. I will merge both the videos of yesterday's class and today's class and then upload it. I will merge yesterday's and today's class and then upload it so that you can use it. Okay. Again, volume 2, I'm going to follow the same principle I followed in volume 1. Volume 1, I think at the end of it, I am satisfied. I will get your satisfaction level also very soon. But I am satisfied about the material. I have some additional things to give you. I will give you. Okay, volume 2 also I want to give you a comprehensive but at the same time simple to understand, not leaving any area but at the same time linking sections, making you look the whole chapter, the what people talk voluminous, the same volume, how to make it simple, straightforward and give it to you. That's what is my focus. From tomorrow morning, 6 o'clock, and hopefully by God's grace I'm back to the institute by tomorrow. I'm feeling much better today. One day of rest, I'll be back. From tomorrow 6 o'clock, we will start with volume 2 with the first chapter, Assessment of Charitable Trust. So meet you tomorrow morning, and both the videos, yesterday's and today's, will be joined and posted. Don't look for 2 classes, it will be only 1 class video. All the best, friends.
Thank you, sir.